Welcome into the reaction channel, folks. Right here at the top of the video, we're going to go through my entire stocks to buy watch list right now. We're going to talk about these stocks, talk about price targets, talk about when I'm going to start positions in these stocks, if I'm waiting for certain prices to get hit, all that good stuff, upside potential with these ones. So we're going to go over all that at the beginning of this video here today. Big day for the public count here today. It reclaimed $3 million. Yes, it closed over $3 million for the first time in several weeks now at this point in time. So been pretty happy with, honestly, how the public count's held up, given obviously the shaky market we have seen here recently. Then I want to react to a couple videos here. First one up here, Rob on the trade tracker here. He bought Amazon and Nvidia. I want to hear his thoughts on buying those two stocks. And I'm looking forward to reacting to this one. Josh Brown talking about buying Toast stock again, which I believe he's been in several times and on and off. So looking forward to reacting to that one. Okay. By the way, appreciate everybody joining me as always. One thing only I need from you guys, and it's for you to smash that thumbs up button. I hope you guys enjoy these videos I do for you several times a week here on the reaction channel. Usually I do 2 to 4 videos a week for you guys. So I hope you guys enjoy it. I know you do, and I appreciate you guys, because we wouldn't have, 85,000 plus subscribers on the channel if you guys didn't enjoy it. So I know you guys definitely enjoy it. By the way, huge announcement here I have for you guys. I announced it last night on the main channel. April 1st, the April Fools Don't Be a Fool sale. I'm doing a 1-day sale on the highest tier for the Patreon. That tier is usually $125. It'll be $49 for 1 day and 1 day only. And that will be on April 1st. That's access to my entire Become a Master of Stock Market course, to see the stocks I'm buying and selling each week, as well as access to that Discord chat. Okay. So pin comment down there today, click on that, put in your name, put in your email. If you want to receive the deal via like text, you can receive it via text, but it's going to be 1 day and 1 day only, April 1st. If you miss a deal, too bad, so sad. And once again, that's for my #1 stock market course ever, Become Master Stock Market, plus access to all that, okay? Alrighty, guys, so let's get rolling here. Let me show you my entire stocks to buy watch list, okay? So here we go. This is my entire list of possible stocks I'm going to be buying, okay? We have TTD, Trade Desk on there, Etsy, Adobe, The Planet, Win, Celsius, Fubo, AMD, and we're going to go over all of these in just a moment. Shopify, Elf, PayPal, Bath & Body Works, Cheesecake Factory, Red Rock Resorts, Nike, Middleby, SoFi, Hershey's, RH. This is like a 2x leverage on the Russell 2000. Whirlpool, Estee Lauder, Mattel, and MU. Okay, so Let's start going through these, okay? Trade Desk. Now, Trade Desk has been wrecked. This stock has been absolutely obliterated. This is a 3-month chart on the Trade Desk. The stock's down 50%. It's been cut in half in 3 months. Absolutely just brutal in regards to that. When it comes to Trade Desk here, this one has me very intrigued. I haven't bought it yet. And as you'll see with my possible buys watch list here, some of these stocks I've already been buying the last couple months. Some of them, I haven't bought yet. Trade Desk is one of those I have not bought yet. But when it comes to Trade Desk, this one definitely has me intrigued because it's had phenomenal growth rates. It's expected to continue really strong double-digit revenue growth, earnings per share growth in future years. And the forward P, it's high at a 40, which is about a double a market multiple, but it's not crazy considering if they're able to keep up this type of revenue growth, let's call it revenue growth of 15 to 20% a year for the next 5 years, then we could look at a forward PE and say it's not that high, especially if their earnings per share can grow at a faster clip than revenue does. Let's say their earnings per share grows at a 25 to 35% clip over the per year for the next 5 years, then we can say a 40 forward P is not high for this one. So the main thing I'm actually spending my time on in regards to Trade Desk right now is I'm just really trying to conceptualize where their business model's headed. And I'm really spending a lot of time on SWOT analysis for this company right now. SWOT analysis is strengths, weaknesses, opportunities, and threats of a business. It's very important you always perform SWOT analysis before you ever invest into any stock. It's one of the many things I teach in, obviously, Become Master Stock Market course and my other courses, okay? So that's where I'm putting a lot of my emphasis right now. I've added to my possible buys watch list, and that's a big step to get on that watch list, obviously. Etsy. So Etsy, another stock that's been hit pretty good recently, down about 12% in the past 3 months. If we look at a 1 year, this one down 27% when it comes to Etsy. Now Etsy, I don't know if you guys know this one. think of it as like you want something for your house that's a very like custom thing that somebody might make in their living room. That's kind of Etsy. It's a fun, I think it's a very fun e-commerce platform, okay, where you can find very specialty items that aren't just kind of like mass market. And it's a tougher place for Amazon to compete with. Not to say people that sell on Etsy don't sell on Amazon, because some do. But the thing I'll say is Etsy does have a pretty nice niche marketplace here. Now, forward P on this one around 18, roughly, right? Even trailing 12-month P is only 20, roughly, right? Earnings per share growth expected next year, 15% plus. Revenue growth, only 3%. So where I'm spending my time right now in regards to Etsy is I'm trying to figure out, can Etsy get back to being a double-digit revenue grower? Because I feel like if they can't do that, if I can't be confident Etsy can get back to a double-digit grower as far as an e-commerce company, I can't own the company. And so that's the last component. Just about everything else I like it in regards to Etsy, I'm just trying to figure out that last component. Adobe. Listen, Adobe's a buy. I have not started a position in this one. Stock's down about 10% in the past 3 months. I like Adobe a lot. I've done my research in regards to Adobe. I like the income statement. I like the balance sheet. I like the business model. I've come to the conclusion that, yes, AI is somewhat of a threat in some respects to their business, but it's also a big opportunity in some other respects. Recurring revenue streams, insanely high margins. Look at it's as high margin gets, right? And I think it should be a company that kind of grows in the 7 to 12% range per year when it comes to revenue for, honestly, years and years to go in the future, and their earnings per share should grow at probably a 10 to 15% clip per year. So looking at Adobe at a 20 forward P, stock's a buy today. And so I have not started a position in Adobe, but if you told me I got to go buy, $50,000 and I have no choice of Adobe, I would feel perfectly fine with that, okay? Planet, that one's a very speculative stock. Obviously, it's 31 cents. So, I'm just kind of waiting to see a little bit more in regards to numbers in regards to that one before I buy more shares. Wynn Resorts looks phenomenal here at 86. When it comes to Wynn Resorts, they got many. I'm actually going to do a video on the private stock group likely in a bit, going over a big interview the CEO just did here very recently. But Wynn Resorts looks phenomenal here. I have no objection to Wynn Resorts. I love that stock. Anything under 100 for Wynn, buy. In that Middle East property opportunity is pretty crazy, man. Like when you understand like what that property could bring in. Celsius, next one up here. Celsius looks like a phenomenal buy here. The Lonnie deal hopefully goes through in the next 3 to 6 months. That's going to skyrocket Celsius's revenues starting at the end of this year and really carrying for the next year. And then you could talk about as Celsius numbers start to come back nice and strong at the end of this year going into next year, the growth rates for Celsius for the next several years should honestly be pretty dang banger. And so the Celsius story has already bottomed in my opinion, and the stock is heading up and up and up regardless of whatever happens in the market conditions. Now, Fubo, next one up here, we're just waiting on the Disney deal to go through. That one's already got a position there. I like that. AMD, I've spoke about that one a lot on the main channel recently. I speak about it sometimes on the reaction channel as well. But if you guys follow my main channel called Financial Education, I've spoken about AMD a lot on there. Shopify, love that one. Shopify is always a buy. Shopify is always buy. At 109, it's a buy. At 119, it's a buy. At 129, it's a buy. At 89, it's a buy. At 99, that's one of those stocks like an Amazon. Any price you get it at, for if you're a long-term shareholder, it's a buy. Obviously the one knock on Shopify is you can say, oh, it trades rich. That's the one knock you have on Shopify, right? Trades at a high forward P. Yeah, 56. But Shopify is a type of company you can count on growing 20% a year for years and years and years to go in the future. So when those type of companies are, I don't want to say 1 in a million, but they're very hard to find. Type of companies that it can grow that sort of double-digit clip year in and year out and have that stability in their business model, those companies don't just come around. They're freaks. They're one-offs, okay? And so they're huge. It's a huge deal, and that's why Shopify will always trade rich, kind of like an Amazon. Elf, I love Elf, especially down here in the 60s. You got to be flipping my flapjacks, man. What a steal deal. Market cap in the $3 billion range for Elf. Oh my gosh, do people realize how big of a deal this brand is? Such a misunderstood story. And I think a few years from now, probably even shorter term than that, but if I just think out a few years from now, people will look back and be like, what the heck? Why did we trade ELF all the way into the 60s? That was silly. And you don't want to know, you listen. I was doing something very interesting in regards to ELF recently. I started looking at 1-year leap call options and 2-year leap call options on ELF. It was insane the sort of premiums you would have to pay, even if you're looking out to $100, $130 a share. Keep in mind, ELF right now is in the 60s. Why is that? Because sellers of those call options understand ELF's likely going to go beast mode over this next couple of years. And the stock's likely going to come back extremely strong. And there's a decent probability that we could look out a couple of years from now and ELF's $200 a share again. And so people are willing to pay big prices for those 1-year out and 2-year out call options on ELF because they understand the stock's going to likely come back extremely strong over the next couple of years as all this tariff drama melts away, right? And then additionally, you have people that are selling those that are saying, dude, I need a lot of money if I'm gonna sell you these leaps here. So, the moral of the story is ELF's looking really good over the next couple of years here. Okay. Next one up here, PayPal. PayPal's just an easy money buy. Some stocks are just easy. PayPal's one of those. You're not going to have to stress over this. PayPal, Venmo, Braintree. Alex Chris running the company on a high level. Company pours in profits. Company has ridiculous cash flows, right? And they're buying back shares left and right now. Billions and billions of dollars of shares. And so the earnings per share is going to skyrocket over this next few years, even off of modest revenue growth. And by the way, the revenue growth story actually starts to improve quite dramatically in the back half of this year and going into 2026. So PayPal, easy money buy, man. Just easy money buy. Bath and Body Works. So there's only one issue I have with Bath & Body Works, and it certainly isn't the forward P or the trailing 12-month P. Look at where the stock trades at, right? I love the business model. And it might seem like a company like Bath & Body Works, okay, so they sell soaps and candles and stuff like that, right? Lotions, all that stuff. It seems like there's a lot of competitors. Sure, there are. But at the end of the day, they've got their nice market niche there. They're phenomenal with selling like seasonal related candles and soaps, springtime, summertime, fall time, Halloween related products, Christmas as we get into that holiday season. And they put up great numbers. The business model is relatively stable. The balance sheet's the only thing that I don't like with this company. And that's it. Everything else I like. I like the numbers. I like the income statement. I like the SWOT analysis. I like everything except the balance sheet. And so that's probably the only reason I haven't started a position in Bath & Body Works yet. Cake, I like everything. I like the balance sheet, the cash flows. I like the income statement, right? I like everything with this company. I like the valuation at a 4P of under 15 on this one. I like the SWOT analysis. I like the growth opportunity over the next 10 to 20 years with all the different restaurant concepts they have coming. North Italia, Flower Child are going to be huge around the entire United States. They got several concepts coming behind those. Just a banger of a company. And I've been banging my hand on the table in regards to this company for the last many months. And listen, in regards to Cake, in regards to stock price with Cake, right? Because I talk about the fundamentals of the company because that's what really matters for a company long term. But let's talk about the stock price of Cake for a moment and what's about to happen with Cake. What is going on out there? Well, the Russell 2000 has sucked for over 4 years now. Small cap stocks. What else is going on out there? Recession fears everywhere, right? Recession. Everybody's all panicked. Oh, recession. That's all they talk about on CNBC all the time. Are we going in a recession? Are we in recession? Consumer confidence so bad, right? What happens to Cake stock when recession fears start to melt away? What happens to Cake stock when the Russell 2000 starts moving up and hits a new all-time high and finally gets out of these doldrums it's been in for 4+ years now? Where is Cake stock going? It's going to $100 plus. That's where Cake stock's going. And so understand the Cake story is huge on the fundamental side, and it's honestly just as big on the stock price side. Next stock up here is Red Rock Resorts. This is a company probably no one else is ever going to talk about. I mean, cake as well, right? Some of these stocks I own are just like, very hidden gems out there, right? But Red Rock Resorts, actually a really successful, stable business model. They own several different resorts in my city. I live in Las Vegas. Now, these resorts are not the ones on the Strip, though. Okay, so when you think about the Strip, you think about the Caesars Palace properties, right? The Caesars Entertainment properties. You think about MGM properties. You think about the Wynn Resorts properties, right? The properties that used to be owned by Las Vegas Sands that they don't own anymore. Red Rock Resorts is not in that business. They're in more of a local business. They own a bunch of good resorts that are off the Strip, essentially. Okay, so very good business model, good management team there. I like this one. It might be one I step in and buy at some point in time. I'm not in a rush to get into that one, but I might. Nike's easy money. Like, I don't know what else to say about Nike. Easy money over the next few years in that one. Middleby, another company. Who's going to talk about Middleby stock? Middleby, I like this one. I want to say they almost have like a monopoly type market share on restaurant equipment. Now, it's pretty cool in the respect of if you look at Middleby and how many different brands they own, like they own so many of the biggest brands in the restaurant industry when it comes to selling restaurant equipment. If you want to start a restaurant, if you're going to buy new equipment, you're going to likely have to go through somebody like a Middleby. And so they have a great business model. They acquire these other companies. They do a phenomenal job about that. They do have some high-end brands that they sell to, that they, essentially own. But at the end of the day, like, I really like this business model. It might be a stock I buy at some point in time. Middleby, I like that one. SoFi, you guys know I speak about SoFi a lot. Obviously, I view that company as long as they can get through the next couple of recessions we have, I see them becoming an absolute financial giant, a banking giant. We're talking, one of the biggest financial institutions in the world. Anthony Noto's just got to navigate the next couple of recessions, get the company out to the other side, thrive in the good times for the economy, and boom. Hershey, Hershey is not a stock you'd ever think I would own, but I like the company. 19 forward P on this one, stable revenue growth, earnings per share growth, right? Obviously cocoa prices have hurt this company quite severely, but it's stable business model, man. Dividend yield of 3+%. It fits my GVD strategy, and so I would love to buy Hershey's at some point in time. RH, I need that one under $200 to start a position. This is a leveraged Russell play, which, if we got hit on the market again, if the market got hit again, I might step in and buy some of that one. Whirlpool, I really like here. I mean, I don't think the housing market can get much worse from a perspective of existing home sales numbers. Like, I think it pretty much only gets better in 2026, 2027, and future years when it comes to existing home sales numbers. And so, literally, it's almost impossible for it to get worse than this in regards to existing home sales. Like, no one's been moving the last couple of years. Like, no one. And so, that is the worst possible thing for Whirlpool. And so, as people actually start to get to move 2026, 2027, I think is going to bode very well for Whirlpool numbers over the next several years, right? Plus, they have a real strength in regards to their products are mostly made in the United States for the United States market. They've already been through the tariff drama of Trump 1.0, so they're actually well positioned for all the tariff stuff. Estee Lauder, steel deal here in the 60s. This used to be a $370 or $300 whatever dollar stock. I think someday the stock will, go to $200 to $300 again, but that's not right now. Okay, the moral of the story is the next move for Estee is a double up. That will go to like 130, and that's when the business model is stabilized. And you start to see consistent revenue growth quarter after quarter, earnings per share growth quarter after quarter. I think we'll start seeing that by the back half of this year. And you'll see the stock move from like $60-something to $120, $130 a share, right? Which is still a mile away from $370. But it's moving in the right direction. I can see how this one starts to turn around. Mattel's, I like that one. MU, commoditized business model, unfortunately, in some respects. But it's hard to see getting hurt in MU over the next few years. At the end of the day, chip demand's always going to be there, right? And you need the memory. And MU's one of the biggest memory plays in the entire world. So you got to go through somebody like MU. And at the end of the day, you think about the needs for memory. If you look about the needs for memory over the last 30 years, right? What has happened? We need more memory, and more memory for electronics, right? And heck, almost everything's an electronic nowadays. So the needs just continue to push higher. And then think out to the next 10 years, 20 years. Do we need more memory or less memory? A lot more memory. Because things are only going to get a lot more complicated in regards to electronics products, in regards to data centers, AI chips. This is all just going to get a lot more complicated. And when things get a lot more complex, you need a lot more memory. And that's where MU comes in. And so MU, not the most exciting business, but it trades at extremely fair multiples. It's a hard stock to get hit severely on because of the low multiples it trades at, because then you can say, okay, let's say their profitability fell by half, right? Well, okay, so let's run some numbers here, okay? So 2-year forward P in the stock is 8, maybe even 7, right? I wouldn't be surprised they come in with better numbers than analysts expect over the next year or two. So let's say then the following year, for whatever reason, memory chip pricing falls quite dramatically and their profitability gets cut in half. So then their 2-year forward P goes from 7 to 14. Like, it's not high, right? And so with a stock like MU, because of where it trades at, it's actually not a bad buy here. And so now, will I buy it? I don't know, man. I've got it on my list. I like the company, but I don't know, man. I don't know. The tough thing is there's a lot of opportunities in the market all the time, right? There's a lot of opportunities in the market. Alrighty, let's talk about some more. Let's talk about Amazon, Nvidia, Toast, and a few other stocks.
Who is buying some of these mega cap names? Amazon. Rob Sechan bought more Amazon. Rob Sechan bought more Nvidia. Rob Sechan joins us on the phone now to tell us exactly why now.
Well, Scott, nice to be with everybody. Hi, guys. Last week on the show, we talked about being in an athletic stance. And on Friday, that's exactly what we did. Corrections like these are historically great buying opportunities for long-term investors because forward returns skew positive. And you have to be ready to capitalize on that. Along these lines, we use the weakness that we saw to increase our exposure to our current highest conviction, Mag 7 names. Now, we've been overweight Meta for a long time, underweight Amazon and Nvidia, and we just think those two names offer an attractive combination of relative valuations, dominance, and durable long-term growth. On Nvidia specifically, obviously Bellware AI, incredible edge in advanced AI chips, years ahead of competitors. Next-gen Blackwell is showing healthy momentum, and this is despite concerns about competition, export controls, slow.
They're not years ahead of competition anymore at this point in time. They're ahead of AMD, but it's not years. Like, you know, when you hear that, you think, okay, they're like 3 years, 4 years in front of AMD. Nope. MI350 getting rolling this summer, right? It actually probably is getting rolling a little bit right now, but in terms of mass production, really this summer into the fall and winter. No, not years ahead of competition anymore at this point in time. Maybe of everybody else, but don't put AMD in that same sentence. There's just not a reality now at this point in time.
CapEx at the hyperscalers, and you have a company that is going to double their revenues in the next 2 years and produce a remarkable $100 billion in free cash flow. And as Jim just said, it trades at 25 times 25 EPS, 20 times 26. So on Friday, we entered the name. And we think it's a good buy. We're still not market weight, but we continue to increase as the market presents opportunity.
I appreciate you calling in and telling us about it because it gives us a good segue. Rob, thanks. We'll see you back on the desk soon. I'm sure of that. It's a good segue to those comments that the Alibaba chairman, Joe Tsai, made today. You bet. Warning of a bubble in AI data center build-out. He said the following, quote, I start to see the beginning of some kind of bubble. I start to get worried when people are building data centers on spec. There are a number of people coming up, funds coming out to raise billions or millions of capital. There are a number, as you know, guys, number of private equity firms that are making big investments in data centers, Blue Owl, Blackstone among them, KKR. There are companies that have seen their share prices go to the moon. They've fallen back down to earth in some respects. Vistra, Vertiv, GE Vernova, Eaton, Constellation Energy. Last I checked, they were all down today, maybe on these comments. NVIDIA is slightly lower, perhaps on these comments as well. What do I do with that from Joe Tsai?
There is some speculation. There's no question about it. But the names that I own, they're contracted out until 2030. And I still think that if we believe in the AI story, which we all do, you still do need data centers. We do not have enough of them. We have 11,000 around the world. We have 5,400 here in the States. You have to get at least double that just to meet up with the demand. And of course, you then need an upgraded grid, which Eaton has said 70% of the grid is over 25 years old. And we have these mega projects. I don't know if they're ever going to be fulfilled, but $1.7 trillion is what Eaton has said is out there, and only 15% have started to be built.
What price do you pay, though?
I have been buying.
For what you just said.
I have been buying.
That's what I mean, right? What valuation,
yeah.
right? Because if you look at, I've got Eaton in front of me, the high 380, it's down to 299. Constellation Energy, the high 352, it's down to 224. I mean, you get my point.
Yeah, of course. So I got slammed on the DeepSeek day because they got hit. And I started buying about a week later just to let the dust settle a bit. So, you know, these stocks were all down double digits. And I just feel like I think we're in like the second or third inning in this. And these companies have done a really good job in terms of managing expectations. And Eaton has a new CEO, and he just talked about $21 billion of cash that he's going to be putting to work between now and 2030, between M&A and buybacks and dividends and that sort of thing. So that's kind of a little bit of a special story within. GE Vernova is all about it's being spun out, and the margin expansion is enormous at this company. And I bought Nextera because I like the GE Vernova combination, the joint venture that they announced. So I think there's a lot of ways you can play it. You don't have to reach for the stars and buy these really super expensive stocks, because these have all come down, and I think they're very good valuations.
Yeah.
Steph, to what you just said, there's many ways to play it. If you're worried that there is some bubble brewing, I don't think so. Or let me put it this way. If there is a bubble, you know, it's in the inflating phase. I don't think it's imminently going to pop. But if you're worried about it, play a hybrid name. I mean, think about something like Oracle, which right now is being, you know, brushed as an AI stock. But they actually have a software, you know, a database company that gives you another piston in the engine. Or, you know, Microsoft, for that matter. There's a heck of a lot more to it than AI. So, again, I'm not that worried that we're imminently going to pop a bubble in data centers, but if you're worried that AI is a bubble, there's a lot of other ways to play it. Cisco Systems.
Well, maybe we were on the precipice of something that has self-corrected in some respects. Josh, real quick before we go.
Yeah, we're about to get a really good heat check here on this theme when CoreWeave prices its IPO this week and comes public. At the current valuation expectation, this thing will be coming public somewhere between $27 and $32 billion in valuation. You can kind of understand it because their growth rate over the last year is like 700%. But it's a heat check because I don't think anyone thinks anything like that can keep going. CoreWeave is infrastructure as a service. So they build these massive data centers filled with the newest GPUs from NVIDIA, and then people come in and rent that compute. We're going to get a really good sense of where the market's appetite is for that theme, and it's not going to take us very long to process based on how that stock opens.
So this Eaton company is somewhat interesting. I mean, gosh, it looks pretty darn consistent, does it not, in terms of just things getting better and better and better for them and projected to get better and better. So, yeah, I got to say this Eaton, there might be something here. I might have to do a little more digging in regards to this Eaton company because the numbers are pretty compelling. The valuation is not like steal deal. However, if there's a lot of growth in this one for the next 5-10 years, then, you know, 26 forward is not too bad. So I don't know. That Eaton one might be worth doing some more digging there.
All right. Welcome back. Guess who's back? Back again. Slim Shady, Josh Brown. Tell us about this third time. Hopefully a charm for you and...
Yeah. This is toast. And by the way, first time I've ever been called Slim on TV, so thank you for that. Look, I have traded this stock twice before, once successfully, once at a break even. But I think in the mid 30s, And the fact that this stock has pulled back because of broader consumer-related fears about the overall economy and people eating out, et cetera, I think it presents an opportunity, because when you go through the last earnings report that they put out on February 19th, you just have to come to the conclusion that they have figured it out. They are hitting on all cylinders, and this is poised to become a really good business. They added 28,000 net locations in 2024. This is everything from like a counter service here, buy a muffin and coffee, to the entire restaurant chain in all of the Marriotts and everything in between. And they have a take rate of about 56 basis points. So you think of it as like a gross payments volume business, and then you ask yourself, how many other services can Toast sell their existing payment processing company customers? They're adding thousands and thousands of restaurants all over the country, and each time they do that, number one, they're making money from the transactions, and the number two, they can sell other services, everything from payroll to order management systems for the kitchens, and you name it. So it became a really good business finally over the last year. They've become profitable. They exceeded on basically every metric out there. I should point out, Block just blew up the other day because their payments business is not doing as well. So Toast is doing something very special within their niche. Morgan Stanley named it one of their best ideas for this year. I think the company grows earnings by 39% this year, over 50% next year. It's trading at a forward PE of 31, and they've just completed their first full profitable year. So I think it's still relatively early to the story.
What was the issue, I guess, that...
Forward P at 31? Huh. Yeah, I don't even, based upon our analyst expectations here, the 2 year is not even 31, so he seems like he's way low. But I'm not saying he's going to be wrong. It's just like, that seems really, really low here in regards to good old Toasty Mosty.
What was the issue that caused you to get out of this a couple of times? I know you got stopped out once. What were the concerns, I guess, on Wall Street about this name that sent it lower to the point where you got stopped out, and then I suppose to the point where when you bought it back, you sold it again?
Well, two things. I have commitment issues, as many who know me know. But bigger than that, this was an unprofitable company in a tape where profitless tech was being punished. So some of it is the context of the environment. That's no longer the case. This company is showing how profitable it's going to be right out of the gates, and it's pointing to a roadmap of more adjacent opportunities in enterprise, bigger customers, a bigger footprint in different regions. And that, I think, really transforms this from a stock that I want to trade to a stock that I want to consider a longer-term position. So I don't have a huge position on here. It's something I'll be adding to. I accept that this is a high beta name. It'll be volatile. But this time I'm willing to commit to it, given the results that we've seen over the last few quarters. I think they've finally transitioned from being a speculative, profitless tech company to really something that's becoming an institution within financial services. Like, they are a very important company to the customers who work with them. I don't think that's going to change anytime soon.
All right, we'll keep our eye on that spiking stock. It is Toast, and Josh is back again.
So Toast, although it got toasted a few times in the past, I might be interested in this one. I mean, I love when a company can go from taking massive losses to then flipping over to that profitability side. And based upon what expectations are here, right, that's exactly what we have. The company was a huge money loser, just flipped over to profitability, and that profitability should increase rapidly over the next few years. Free cash flow exploding to the upside here in regards to this one. Operating cash flow exploding to the upside. And we should be, in theory, early days in regards to this one, right? Shareholder equity, $1.5 billion here recently. So, revenue has exploded on this company to where it's at now, around that $5 billion number on a trailing 12-month basis, and expected to go to $7 billion plus over the next couple of years. So, Toast might be an interesting one to dig a little deeper into and see maybe there's something there, and maybe this one. But I love these sorts of companies that are like, well-entrenched business models, which seems like what Toast will end up being, right? Well-entrenched business model, and flipping over to profitability. So who knows? I might go ahead and, take a deep look at that one. Okay. Appreciate everybody joining me as always. Hope you guys enjoyed today's video. Additionally, pin comment down there if you're looking to access our one-day sale we're going to have on April 1st and you want to be sent the deal when it comes out. So one day only sale. That will be pinned comment down there. Enter in your name, your email, or your phone number as well if you want to receive the deal via text before it ends. Access to my entire Become a Master Stock Market course, access to see the stocks I'm buying and selling each week, exactly how I build a portfolio, and that Discord chat access as well over there, okay? Much love and have a great day.